is that? One of the fundamental principles of my trading methodology is to find low risk, high probability setups. The standard method of trading a breakout does not provide for low risk, and it does not provide for high probability setup. Let's look at an example to see what I mean. We have here, for example, an area of resistance. Price comes up to that area of resistance and pauses, and then channels down below. Now, most people will suggest that when price finally breaks through this area here, that we enter here in this vicinity of the breakout with a stop loss down here somewhere just below the low of the area of congestion. For me, this is not low risk. The distance from the entry here down to the stop loss here is just too great. Yes, I know you can reduce that position size accordingly to get the same dollar or percentage of equity risk, but that's just not my style. And for me, this is not high probability either. Okay, in this situation, in this exact trade, there may be sufficient order flow in this area here to propel the price skywards and to make this trade a winner. That's great, but the statistics show a significant number of breakouts fail and will turn around, tracking back down that way and stopping you out for a loss. So it doesn't matter if it's a breakout of an area of congestion, as we just saw here, or something else, for example, a symmetrical triangle pattern. Entering here, stop loss down here. Regardless of the pattern forming the breakout, in my opinion, it's just not low risk or high probability. Now, that doesn't mean you shouldn't trade breakouts if it's something you really relate to. Many traders trade breakouts and do very well, typically because the profits they make when they do win are proportionally much larger than the losses. So you'll see here, the average win much greater than the average loss. Okay, that's all well and good, but it does come at the cost of a lower winning percentage, and that's the part that just doesn't work for me. It may work for you. So how do I trade these areas? Well, the support and resistance article series handled the case where support and resistance held. So for example, resistance, again to stick with the same example, price comes up, tests that resistance area and falls. And we're aiming to trade short anywhere as close as we can to that support and resistance area, with the stop loss nice and tight just up above here. But what about when it breaks, when this area doesn't hold? How do I trade that? Well, I'm simply looking for price action to offer me a low risk, high probability setup just after the breakout. So anywhere in this area here, or in some cases even before it breaks out, down around here. Yes, you can get in before the breakout traders. Let's see what I mean. After the breakout, I'm simply looking for the first retracement which offers a low risk, high probability entry with the stop loss tied up below the low of the retracement lows. So let's have a look at that example. Stick with the same example. Resistance here. Price comes up to the resistance area, maybe a couple of tests, before finally breaking out. As I said, I'm simply looking for the first retracement which offers a low risk, high probability entry in this area. So it may be this retracement here which will allow me an entry round about there with a stop loss just below the lows here, or it may be this second retracement which is even better, where the lows comes down to coincide with the previous high, offering an entry around here with a stop loss down there. Even better is when the initial retracement comes all the way back to the point of breakout, offering an entry in this area here, stop loss just down below. If you've read through the support and resistance articles, you'll understand the supply and demand dynamics that are taking place in this area and why it provides both a low risk and high probability setup. A common complaint from novice traders is, what if I miss the entry? What if, for example, price does come up here, pauses at resistance and breaks out and does not provide that retracement? Well, tough. You missed one, so what? Your job now is to simply look for the next low risk, high probability setup. If it didn't come here, then it'll come sometime later. So hang in there. There's always more trades. But how do we enter before the breakout? It all comes down to price action analysis and being able to determine probable future price action from changes in momentum and volatility. This comes with experience, but let's look at a simple example. Once again, resistance. Price coming up to the area of resistance. Before a breakout long. In this example here, it shows increasing momentum on the upswings, there and there, weakening momentum on the downswings. And a really great example here, because we always also have higher lows. So we have a low point here, higher low here, and higher low here. So this is a great textbook example. In this case, I'll be looking to enter long following one of the weak retracements. So perhaps try it here with a stop loss just down below. And perhaps try it here again, entering long with a stop loss just down below. Now, I always manage these trades aggressively. If the breakout doesn't come, I'm looking to get out of there with a small profit or break even. So I always look to ensure that I have at least a 1-to-1 risk-reward ratio. So the area here, from the entry to the resistance, is greater in this example than down to the stop. And just slightly larger here in this example here. Always look to have at least 1-to-1, so that if the breakout doesn't come, I'm not taking a loss. I'm out either break even or with a small profit. So that's how I trade the breakouts. Trying to enter short, somewhere up here for example on this one, prior to the breakout, beating those breakout traders. Or if I miss the entry, then I'm looking for the first low risk, high probability setup somewhere down in this area here. Now, not too many opportunities in this trade, and perhaps I missed it. That's fine. Sometimes you do miss them. Other times you get better entries. Either way, it's good because it works well with my trading psychology and my need for a lower risk and higher probability trades. I hope that gives you some